Welcome back to our SABC News viewers. Let's go to the Johannesburg Stock Exchange now, where Nompumelelo Siziba is standing by. Very good afternoon to Nompumelelo. Italy seems to have caused a lot of relief for certain markets.
Thanks very much, Nzinga. That's right. So yesterday, markets were a bit perturbed. And of course, the day before, they were even more perturbed. And of course, we saw greater losses the day before yesterday. Things calmed down a little bit yesterday. In fact, they calmed down a lot once it was realized that there's a possibility that a government can be formed in Italy, or at least that's what the Prime Minister designate said, as you mentioned. So that saw people go back into Italian stocks, and their bond yields went down, which is a positive thing, and so investors were less concerned. But of course, as one fire is put out in the global market landscape, another one flares up. Apparently, the United States is now looking to levy those steel and aluminium tariffs on Europe, commencing tomorrow. So that's a little bit up in the air. And of course, those tensions continue to simmer between the US and China around trade. In terms of what's happening on the local all-share index, in line with global markets, we're seeing the market up, with financials really a main driver. Let's take a look at the indicators. I'm joined by Makwe Masilela. He's from Makwe Fund Managers. Thanks for joining us, sir.
Pleasure.
Good stuff. So it's a better day on the markets. What do you see as the main drivers today?
You know, I think the fact that we're seeing the tensions, like you said in your intro, easing when it comes to this whole thing of the Italian government. Remember, because if they don't form a government, the Italians, it will mean they'll be going to the elections for the second time this year. And it means that that might also be seen as a referendum on the euro, even though the guy said, you know what, we're not going to be doing that. No one said he's going to leave the European Union, but that's what the markets are reading into it. And given that the reason they didn't form the government in the first instance, it was because of the guy that they nominated as the economy minister, who's been seen as more of a Eurosceptic. So if you see tensions that side, trying to, easing up, the markets were pleased, with all that. And also the fact that we've seen the Chinese manufacturing numbers being very good numbers, that also helped the markets. And hence you see our resources, stuff like that, going up, because China is one of the major buyers of our mineral resources. So that's what's been driving the local market.
At the beginning of a new month, we do get a lot of data, of course, and like you say, the Chinese PMI looking good, and tomorrow we're expecting the US non-farm payroll number, that is the jobs number. What's the expectation there, and what do we need to look out for?
I think the numbers will continue to be a good number, because so far we've seen that the US companies, their earnings, they've been very good earnings, so it tells you that the guys were continuing to hire people. And also if you see what happened to the ADP report, which was released on Wednesday, not a bad number as well, which more or less it gives you some indication, even though not a very clear indication, what to expect on Friday. And you said that's the matter of all reports, because the purpose of any economy, you want the economy to create the necessary jobs. So if you continue to create jobs, then it means you'll also be able to collect more revenue as a government and be able to spend on other things. So we expect to continue to see a very positive number, confirming that the US economy is still doing okay.
And then the trade tensions that I alluded to, what's going on there?
Very interesting, because we even heard that there might be a possibility that Donald might impose something when it comes to German car manufacturers, the automakers. We're not sure about that, but what you said earlier is so true, that tomorrow chances are that temporary reprieve that they had as the European Union is coming to an end, and the tariffs might be kicking in on steel and on aluminium. But also what's more interesting, we know that China indicated that, you are ready for a trade war if that's what the US want, and apparently they're also lining up other countries from Europe and Asia by trying to open up their market as China, that those countries can have more access to their market. So in a way, I think the Chinese as well are ready for that. So it's a very interesting one, because if ultimately it happens that we have a trade war, that's not going to be good for the global economy.
That's right. It's going to be a zero-sum game. And then let's look at the all-shares index specifically. Markets are looking good today, in line with global markets, but the financials seem to be the key driver. Why is that today?
Financials initially benefited from a stronger rand, but now if you see the rand starting to weaken, you'll see more of our industrials, more of our base metals doing better than the financials because they tend to benefit from a stronger rand. And with the PPI coming out, then that's also another story which is going to affect the financials going forward. What's
happening with the PPI? I understand it's gone up, the purchasing price index.
It was bad compared to March. Remember, February it was almost 4.5, then March it went down, which was a good thing, to 3.7, but now it's up again to 4.4. Remember, PPI basically tells you that the guys at the factory, the costs are increasing, and if that continues to happen, then the guys have to ultimately pass those increases to the consumers, which will ultimately affect your consumer price index. So you don't want to see that happening. And we know that because of a weaker rand, then you expect inflation to go up, whether it's the CPI or PPI. Also, with high oil prices, it's also having an impact on our inflation.
The Reserve Bank did mention last week that there's a possibility that they'll raise rates towards the end of the year. Wouldn't that be somewhat irresponsible because our economy is really struggling to grow?
It is struggling to grow, but the question is if inflation gets out of control, because if inflation itself is an indirect tax, because it's eroding your purchasing power, so you have to try to do something to tame it. But yes, using that tool of increasing interest rates to tame inflation might become a blatant tool, in the sense that inflation is not going up because people are borrowing more. Inflation is going up because of things totally out of our control. The likes of the rand is weak. Why? Because of the strengthening dollar. Inflation is up. Why? Because of high oil prices, which has got absolutely nothing to do with people borrowing money from the banks. So ultimately, increasing interest rates might end up being a blatant tool.
Indeed. And then June 22, that's going to be a key date. That's when OPEC and non-OPEC countries like Russia are meeting to decide what they're going to do in terms of whether they're going to pump up more crude on the back of problems with Venezuela and potentially with Iran. What's your expectation, and what do you think is going to happen with the oil price?
You know, in the first instance, the guys, for them to reduce the output was to increase prices. That was clear. So now, whatever they need to do, they have to make sure that they continue to keep prices at elevated levels. Russia already is complaining, their central bank, that the low oil price is not going to do any good to the economy. Forgetting about the OPEC guys, we know the OPEC guys, it's a must. They need high oil prices because that's their bread and butter. So I think whatever action that they will take, they will make sure that maybe let's gradually, try to close the gaps, if it could happen, that the gaps which are left by the likes of Venezuela and Iran, instead of them starting to put more oil, because the minute they do that, then definitely prices will go up. But at the same time, they have to guard against very high oil prices, because it's encouraged the guys from the US to start producing more because prices are attractive. So they have to do a balancing act.
I just want us to look at Goldfields very quickly. They came out and said that they're going to be setting aside some acquisitions because, their costs are just getting too heavy. I mean, what did you read into that announcement, and is it a good thing?
I think they're clever. We'd have to be honest, because you just have to, at some point, sweat whatever that you have, instead of just keep on growing by acquisitions, because the minute you buy things also is costing you, whether you're using your reserves or you'll be raising money to pay for that. So at some point, please work on whatever assets that you have. I think it's a wise move for now.
Okay, all right. Well, we've nearly run out of time, but before we say goodbye, what happened with the Goldfield share price? How was that news received?
Unfortunately, by then, tomorrow, yesterday, they were not doing that okay. But today, we see that all the gold shares are doing okay. And that's at the back of a high gold price. So not specific to the news, but because of the price of gold.
All right. Super. Thank you so much, Makwe, for your time. That was Makwe Masilela. He's the chief at his company, Makwe Fund Managers. And after a short break, Nzinga will have more business news for you.